Friday the 19th, 2016. Go over a few of these again. Ran out of time there. Okay. S&P 500. Okay, we're making new highs, but yet the number of stocks participating aren't. They actually peaked back here in 2013. Two schools of thought. There's extra room to run, and the new highs are coming on fewer. It's shaky, wobbly table kind of deal. Discretionary. Same situation. Things were a lot better a few years back for the majority. Bullish percent for the New York Stock Exchange in general. Same principle. When the economy was rolling, this is the sector change. This is the fallout of the commodity boom coming to an end. Now there's a new phase that we're going through right now. Financials, they're having a tough time here because of margins, but yet they still seem to make billions of dollars. NASDAQ composite. NASDAQ's up there. Same thing, making new highs. Only 62% of the stocks are in a bullish phase compared to back here in 2013. I should actually make a chart of this and then put the composite over the top of it. That'd be interesting. I can do that tomorrow. Okay, energy sector. Okay, to me, it shot up just like with gold. I assume the gold stocks are going to do the same thing here. Come on back down, and so we're going to get a bounce here. We have the seasonally the driving period, even though it doesn't make any difference. People believe it, even though it doesn't really affect the price. Transports. Here was the lows, the two lows. So I would lean towards the transports, even though they're very weak. A lot of these are, you're going to have money come out of hot things and have to go into the cold things. So here's a point and figure of oil. I wanted to show this to you real quick. It did get updated today, right? Yeah, the 19th. Okay. Point and figure doesn't use time, it just uses price. As you can see, oil here is pressed up against the previous high. Okay, this is the low down in here. If it breaks through here, they're going to be talking about 60, but there's a first starting point around 54. Here you can see that there's overhead supply up at here at 59, 57, 52. 54 doesn't really have much, but that's what 54 is what I came up with linear regression lines, and support at 46. Okay, so it's at second 49. So, if you're going to do buy rights, you could do like at 52, 57, 59, that kind of thing. All right, crude oil, same. You can see the reversal here. Okay, the R1 and R2 here. Those would be your targets. I stopped somewhere on this line, not to get too greedy, but just a couple of bucks. $3-4 in oil is enough. Is there a possibility of going up here? Well, this is a decent setup. If it clears here, this would be your next target. Judging by the way that the commitment of traders are just moving stuff around, it wouldn't that they press oil, and that would be perfect timing for a September rate hike, to kind of cool the jets. Because if you follow the commitment of traders, the players, the funds, and everybody, we're bullying these markets something fierce. Here's corn. Should see a bounce for harvest time coming through here now. Gold prices still have a swing here, but I'm leaning towards the short side. I really don't care about how much of a bounce gold has here. It's what happens afterwards. Natty gas is coming back, but it looks like it's making a bull flag on here. And what do we have here? Soybeans. Expect harvest pressure to happen with the soybeans. And this should be the last one for now. Sugar looks like it's going to come back into somewhat of a bull flag down in this area here too.